Alright guys, welcome back. I hope everyone's doing good, hanging in there. Honestly, I feel bad for the entrepreneurs out there. If your business is struggling, I've talked to a few, and I'm going to talk about that. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. These are just my own opinions. I could be completely wrong. Investing, trading, it's all extremely volatile and extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. And I mean that. So, stock market. It's just ripping higher, right? So in this video, I'm going to talk about big news events and give you guys my opinion. I just want to say one thing. When we look back on this, you know, hindsight 2020. Hindsight 2020. Remember my Economist magazine video? Well, it's funny, right? It was hindsight 2020. When we look back on this, I think we're going to see this as sort of a commie revolution and a takeover by the megacorps and just destruction of the middle class, or what was left of it, and sort of a wealth transfer in that sense. It's just a new paradigm, right? And it's funny, they always do it. Every 10 years, something big happens. I'm just going to leave it at that. So, all small businesses are just annihilated. I mean, I've been driving around for a few days, just doing errands, running here and there. I don't live in fear, guys. Matter of fact, always being in isolation and not exposing yourself to the elements by having something on your face, it probably destroys your immune system. Anyways. Oh, and a plant tested positive. It was an African, it's on my Twitter, an African president who had a bunch of things tested and they came back as positive. Where was I going with this? Anyways, I'm driving around. You know, I drove into the city, this and that. I mean, it already looks third world. It really does. It already looks. If you just open your eyes and look around and you drive into urban areas, once there used to be many small shops everywhere, and now they're just all either empty because they've already cleaned them out or still shut down. And more than likely, if they're not shut down, they will be. And the only thing you're going to have left are these big box stores. It's just a nightmare. That's not good. Most people are employed by small businesses, guys. Well, you know, these guys, they don't like competition. Okay? Let's just leave it at that. Why do you think I have to watch what I say when I make these videos, right? Because they don't want me saying certain things. Like the truth. So, let's say high schoolers and young people, their first jobs are usually, for the larger percentage, they're hired by small business owners. Because one, you know, they're not going to provide them with all kinds of benefits and this and that. And high pay, because you're young, you're not experienced, right? But that's not the point. The point is, you get life experience when you're young and you get hired by a small business owner. You build up, you know, experience in working, running a register, running books. You get a good work ethic, and you become somebody in this world. Well, I posted this before I get into all the news, and there's a lot of good news. So you're going to want to watch all of this video. Hopefully it won't run too long. Every time I say that, it does though. Well, you know what? Expand your attention span, because this world it's going to become very unforgiving in the near future. So businesses discover employees would rather stay at home and collect unemployment during this situation, this crisis. So this is what I wrote. If they bring out UBI, which is Universal Basic Income, then most of the population will not work. There will be less goods and services chased by monopoly money, which is true. If everyone's sitting at home, not everyone, but a lot more people, and I'll get to the unemployment numbers and all that. You're not going to believe it. But, they're still buying things. But mainly they're not going to buy big ticket items, because they don't know when the gravy train ends. A lot of them will try to save some of it. But then eventually they're going to realize that if they keep it in the bank, it's losing like 5% like every quarter or something, because inflation is going to pick up and negative interest rates are pretty much already here. And that's what happens when you have negative interest rates. You pay them money to keep your money safe. And that's another reason why they want to get rid of cash, because you can't opt out. You can't put it underneath your mattress and pay the bank like interest every month, or fees basically, because there's negative interest rates. Your money's not gaining any value by you holding it. It's losing value. It's losing value in the bank, and then it's losing even more value when you go to shop. And you're going to start seeing shrinkflation real in your face soon. You get bigger packages filled with air, less food. You'll see. Anyways, but that's why I say the first phase is stagflation. Big things, maybe vehicles and homes, will drop in price. Although they might prop that up, we'll see. But they should drop in price while everyday things go up in price, because there's less goods being made, less services being provided, because a lot of people lost their jobs and a bunch of small businesses went out of business. So now they're sitting at home on their asses collecting money, right? So they'll buy all the things they need to survive. And then the things that you need to survive, like food, will go up in price. On top of that, we have the supply chains broken, and globalization's broken, so you're not going to get subsidized cheap Chinese crap. And it's a perfect recipe. All right, so I'm just going to read it real quick. This is the perfect recipe for inflation. This is also a great way to destroy the economy. 1, shut down the economy. A complete overreaction. It was. 2, discourage people from working and make them dependent on the government. That's pretty much what it does, right? And then you'll do whatever they say, because then they'll take the teat away. And then that's why certain areas like the hood is, it doesn't work, right? Because I'm not going to get into it, but trust me, whatever they give you is never enough, and then it's going to lose value, and then crime's going to go up. All right, 3, break the supply chain and globalism causing shortages in most things. 4, all of the cheap money, aka credit created, destroys more businesses and bankrupts the states, and the reaction will be to raise, revenue for the states. Meanwhile, negative interest rates and inflation will eat away at your savings. And to pay for those, and whoever's left working will have to pay more into the system, because now we have more horses in the buggy than horses pulling the buggy. Literally, this is basic math. There's more people not working in the US than people working, and this is global as well. This will be the same in everywhere, pretty much globally. That's why it's a It's like commie revolution, pretty much. Like, they're doing this on purpose to turn everyone into. Listen, when you take money from them, it's not free. You're now you're a slave. So now you're going to do whatever they tell you. All right. I don't know if this will turn into Mad Max scenario, but a revolution or Soviet style collapse is very, very likely, and that's my opinion. Maybe in the next few years or less. Also, the 20 to 25% of the people in stocks, mainly boomers, are cashing out their retirements at an increasing pace as they all retire, and not just that, as inflation goes up, they're going to have to cash out to survive, right? And are also collecting unfunded entitlements like Social Security, Medicare, Medicaid, all of that stuff, pensions, which are all bust. They're all bankrupt for the next 10 to 20 years. Now, again, let me talk about this real quick. The pensions, so the states want to get bailed out. It's because, especially the lefty ran states, their pensions are all bankrupt. They've all gone bust. So, is the federal government going to bail them out? And if they do, then they'll just keep spending recklessly. And then the other states who were not spending recklessly, who are paying more into the entire system, right? They're getting punished. Again, savers being punished and responsible people being punished. And then they're going to start spending like crazy. And again, perfect recipe for literally hyperinflation. This will also help to stimulate inflation. Imagine a world where the elderly collect entitlements while the young collect welfare, and nobody works while the stock market rises to record highs with runaway inflation. That's the future. Literally, I think we're going to see very soon. By very soon, I don't know. I'm not exactly sure, but I can't see this going further. Like 5 years from now, we're going to already be there for sure, in my opinion. Can this happen 6 months from now? Can it happen 2 months from now? Yeah, I just don't know how long, because I don't know how long the rest of the world will continue their capital flight into the U.S. stock market and economy, because the U.S. looks the strongest, because it could get away with printing money and not causing inflation. Meanwhile, emerging markets can't print money without causing inflation. That's why all world currencies are pretty much crashing versus the dollar, especially the euro recently. And that's why half of my private members from my private group are foreigners, because gold is hitting record all-time highs like every week. Meanwhile, in the U.S., for people who get paid in dollars, it doesn't seem like that. It just seems like we're testing all-time highs. Do you see how that works? The U.S. looks more... This is the milkshake theory again, Brent Johnson. The U.S. looks better the more it prints, because it can bail itself out at the expense of the rest of the world. So therefore, capital flies into the U.S., dollar demand is still high, while everyone took out dollar-denominated debt. Well, it is debt. Debt. That includes sovereign wealth funds, that includes foreign corporations, financial institutions, and everything. I don't want to get into the foreign swap lines and all that. It gets kind of complicated, but in a nutshell, the U.S. looks the best right now because it could get away with printing. And they will continue to print, and they will do UBI, they'll do student loan forgiveness, they'll do everything while they could still get away with it by keeping the dollar sort of So if they didn't print money, this scenario that just happened the past 2 months, it would shoot the dollar so high and it would make it so strong that it's actually negative for the economy and really bad for our trade deficit would explode. And our businesses would go under because we couldn't sell anything. We couldn't sell anything to the rest of the world. We still do that at some level, right? Technically, the U.S. still has the second largest manufacturing, sorta. Again, it was in a bubble. We'll see at the end of this. who's not wearing their shorts when the tide pulls back out. Anyways, but in the nutshell, the U.S. has to print money to keep the dollar from becoming too strong, so they will. And because they can do that and print, it sort of sucks in the rest of the world's wealth and capital. But it's all fiat, guys. It's not real wealth. Again, fiat is just a measuring stick. It just measures goods and services. If you actually... So that's why the dollar is doomed to fail, because the U.S.'s goods and services don't justify the strength in the fiat. And no, the military doesn't either. And oil doesn't either. Oil, like, it just doesn't. The petrodollar is gone. So eventually the debt, because fiat is actually credit, it's debt, in the end game of all this is going to be inflation. So I agree with both sides of this argument within, like, the gold bug, sound money Austrian community. I agree with Brent Johnson, but I also agree with Peter Schiff. I just think Brent Johnson's coming first, and then Peter Schiff's. They're theories, right? So, but both are bullish for metals. Okay. All right, let's get into the news real quick. Certain states are just, I mean, they're just draconian. They're just destroying their own economies. That's why they shouldn't bail them out. And then people will just move out of those states, right? And then people will see how these left-ran states are, I mean, it's like Soviet-style draconian stuff. I mean, it's pretty obvious if you haven't noticed. That's why I think Orange Man still has a good chance. Although, who knows who's really going to run against him. They could play some tricks, right? Alright. So, it's bad. Massive earnings downside. Surprises send record hope into 2021 at best. Listen, earnings per share, revenues, just cratered, collapsed for all these corporations. Now, this is like how Wall Street thinks, because they are conditioned to buy every dip. And that's just that punch protection team and the Fed, right? Through BlackRock buy stocks. Wall Street knows that they can't let the stock market pop, the bubble pop and crash completely, right? So that's what they're all betting on. They're just betting on the fact that they could keep the music playing longer and longer. Whatever. I don't care. I don't go long. I mean, sometimes I do with the ETFs for trades, but I don't invest long term or anything in the stock market, because I know at any given day, it could be in one day, it just all goes to crap. So I wouldn't risk doing that. That's why I invest in metals and miners, right? The mining stocks have been outperforming. I mean, gold has been outperforming the S&P 500 and the Dow Jones if you adjust it for inflation. The mining stocks are gonna, it doesn't matter how high equities go. If you adjust it for inflation, you're losing money in the end. That's what it's gonna come out to. Maybe not right now, but give it some time. The mining stocks will outperform so much that you will not adjust it for inflation. They are adjusted for inflation, literally. You're going to make massive gains. Go to my website if you want to join the private group. It's a one-time payment, then you get the report, and then you get an invitation for the private group, and that's $10 a month. If you can't get a hold of me, it's very easy. There's many ways to get a hold of me. Like, I'm probably the easiest person to get a hold of. Just go in the links below the video and message me on Telegram. So, world stocks. Here's the green line. World stocks, green line, going up. Earnings, like past Great Depression levels, just there are no earnings. They're just losses. It's a dystopian we live in. And the only reason why is because we have central banks, right? S&P and earnings per share expectations. It's just ridiculous. So, with futures forecasting the Fed to cut rates to minus 40 basis points in December 2020, is it any surprise that analysts are pushing off recovery hopes? So, there's the futures for the Fed funds rate. That's people guessing, the market guessing where rates are going to be in the future. They're guessing it's going to be negative 40 basis points. Now, Powell has come out and said we do not want to do negative interest rates. I mean, that's the right thing to do. Because if they do, there's no point in keeping your money. Guys, you're going to be losing money if you keep it in the bank, literally. And it's so destructive for the economy. Very, very destructive. Ask any European, Western European, how that's working out for them. They're better off just stimulating QE. Just there's no point. Just keep it at 0 or somewhere around there. Just not negative, and then just keep printing. You're better off doing that, in my opinion. Maybe there's something I don't know. Maybe they're scared of the bond market blowing up, which is, but they could cap it, every time it goes up, they just print more and buy more treasuries, right? Monetizing the debt. Yields hit session high after Fed cuts Treasury QE to just $7 billion. Here's the problem. It's QE infinity, called that for a reason. Every time they pull back the money, the Burr machine, you're going to see bonds spike. And if bonds spike, I made this chart. It's very nice. This is my chart. I've never seen anyone else do this. On the 10-year yield. I made this chart, right? If the 10-year yield, I'm telling you, gets above like 1, the market's going to start dumping. If it gets back above 1.6, I think it's party's over. The music stopped playing, not enough seats. These monopoly corps are going to crash too. So that's a good thing, though. Listen, there needs to be a crash one way or another. It's better we get a crash than the stock market keeps going higher like Venezuela while everyone else starves on the streets. And they're going to blame capitalism, which is, there's no capitalism left, guys. It's just a giant Ponzi at this point. And it's going to really piss people off. I mean, Wall Street, the stocks keep going higher, but everyone else is just, there's massive inflation and people starving. All right. No, the lockdown driven savings mirage won't save the economy. Savings rate versus GDP and deficit. Interesting. The fiscal and monetary response to the nano zombie created a surge in savings. While many hope those savings will go back to work, the savings mirage won't save the economy. In recent weeks, there has been a good bit of chatter about the surge in the savings rate. The rate has now jumped to the highest level seen in the last couple of decades, suggesting the consumer is now well positioned for a consumption comeback. Yeah, again, I don't agree with this. This is my thoughts. I feel like people are saving money, but they're not paying off their credit cards. They're actually maxing them out. And they're just saving that money because they're so worried. Like, I need this to eat later on because I lost my job and my job might not come back. And maybe they'll stop sending me free money, right? Like, $1,200 was nothing. For an American, I mean, $1,200. A middle class, that's nothing. That's pretty much 1 month's worth of for one person, bills and food. If you're a minimalist in the US. And that's for like not even living in the city. If you live in the city, I don't know. I don't know. That's why there's mile long lines of people in their $30,000 new cars at the food banks. Oh yeah, I just want to make a comment on this. I've been driving around before I continue with this, and I see so many people buying cars. Are they smart? Not anymore. They thought they were smart. They thought they were brilliant. They're like, oh, now's the time to go buy a vehicle. I got $1,200 for down payment. And right now, the car prices have dropped dramatically. But now everyone's going out. The smart people who have savings left are going out and buying used vehicles. Not so much new, just lightly used vehicles. And some beaters. And they think they're brilliant. Well, because everyone just did that. A large percentage of people did do that. Like a decent amount. Because all I see are temp tags everywhere. That means that the prices are still artificially high. Because there's demand still. Just wait a few more months. 6 months or something. And you'll see that once those savers have bought up all their vehicles now, then the demand is completely gone. And the glut is still there. Unless, this is the caveat, they come out with UBI, Universal Basic Income. And it's like a decent amount, like $2,000 a month. Then all of a sudden, again, the used car market's going to get propped up. The prices will still go back up. And I won't say they will go back up, but they will stay at a constant. Because people aren't going to be getting credit. Banks are not lending anyone anything anymore, all right? The credit gravy train's over. So giving anyone credit, it's over, guys. If you don't have an income, like if you don't have a job, what are you going to put down on the application? I get UBI. I really hope it doesn't come down to that. Anyways, that'll prop up the market. It won't totally implode. It just will prop it up. It might still fall further. It probably will fall further, like another 10% or something. But if people get UBI, it'll stop the used car market from imploding, the prices for the vehicles. Either way, I don't care because I'm still looking, right? I'm still in the market. I'm waiting longer. Patience pays. In folds. Because if they do come out with UBI and they prop the prices up a little bit, my mining stocks are doing like rocket moves, all right? They're going to the moon. So, whatever. Actually, for the people in the private group, all this crazy stuff, this UBI, debt forgiveness, all this, it's all bullish for us. All of that money is going to go to our pockets. My pocket. It's going to make its way through the economy. Money velocity is going to pick up. Inflation picks up. People panic. And Wall Street notices, oh, look, mining stocks are the most undervalued thing in the entire world. All of that money is going to flow slowly but surely to our pockets. Okay? Again, I was talking about windfall taxes. They're going to do that on the companies. The mining companies, not so much you. It's less, it's more acceptable. But that's going to come later down the road, and it's not going to matter. Your gains are, I feel like my gains are, the percentage gains are going to be so large, it's going to not affect you as much. And not just that, you could sell prior to them doing that. I don't know, we strategize, all right? So, but with physicals, when you go to sell those, that's going to be harder, right, to cash out on the physical stuff. In my opinion, I could be wrong. I could be completely wrong about that. It might be just the opposite. Either way, I'm very tuned in, and we move quickly, right? Deficits are self-financing. Deficits push interest rates down. Deficits raise private savings. What? That doesn't make sense. Okay, the hope is that the cash hoards will eventually begin to flow back into the economy through increased applications for mortgages, autos, and durable goods. That increase in consumption will also lead to decrease in staggering 3.8 trillion deficit by the end of the year. No, that's not going to happen. Do you want to know why? Because all the small businesses just went bust. They went under. A lot of small businesses have gone bankrupt. People aren't gonna just go out and spend. I mean, some people just did. They bought used cars, but you need a car, right? Especially in the U.S., distances are far in between. But it's not like people are gonna go spend on other things when they don't have jobs. And I'm gonna show you guys the jobs numbers that came out yesterday. Listen, I mean, mainstream, these analysts, these economists, these Ivy Leagues they came out of, they're just, either they're fooling the public for their own invested interests and their own portfolios, their own bags, or they're very stupid. All right, the savings mirage. The understanding why the savings rate is not what it appears to be. You have to understand its underlying construction. The website howmuch.com recently provided that calculation of us, a breakdown of the average American spending, average consumer unit expenses in 2018. This is 2018, guys. All right. Look at this. I'm going to post this in the newsroom. This is a nice visual. They don't have percentages? It's just a visual. They should have put a percentage there. I don't know. Food. This is going to grow. This is going to be huge after 2020. I hope we need to keep track of this visual to see how it changes over time. So this is going to become huge. The home will probably become huge because maintenance is going to become more expensive. So will utilities. Equipment, all that. The cheap equipment. Remember, I went out and I bought a chainsaw for $100 because I don't feel like paying $400 right now for it. Yeah, I want to buy an American built one, but opportunity cost. I'd rather throw $300 into mining stocks and physical, let's say, than buy a $400 chainsaw right now that lasts forever. Because that $300 maybe a few years from now will be $30,000, and then I could buy that chainsaw. Maybe the chainsaw price will double. It'll be $800 or $1,000, but you see the difference, right? Opportunity costs. You either spend $400 now, or you spend $100. The difference is maybe tens of thousands if your investment works out in the next few years. Yeah, that's how I think about everything in life. Opportunity cost. Transportation? Well, gas prices. These are insane numbers. So income before is 78,000. Income after is 67,000, and this is for middle class. Average annual expenditures is 61,000. So you only have 6,000 left over for savings, which I guarantee you goes to, who knows, like other things that people buy, vacations, But this is for probably a family of four. So you have two working adults. They make 78. Then after, they get their shakedown, it's 67,000. Good visual. This was 2018. What if one of them loses their job? What if both do? And then they get $2,000 a month. That's 24,000. And I think they take their share out of that too. Your UBI. What a scam. And I mean, yeah, so median personal incomes by quintile. This is interesting. So middle is 40 to 60%. That's probably fallen down to 25% after all of this. That's the blue line. The bottom 20% is this light blue line. It's down here. They essentially have no, no savings whatsoever. The bottom 20 to 40% is the spread line. Majority of Americans are below 50 grand a year. Like, I think it's like 60%, something like that. I don't know. I don't know exactly the percentage. Maybe there's another chart. Meanwhile, the top 5% doing great. Porsche sales and Lambo sales are just through the roof right now. And this is going to cause class divide. It's going to cause class warfare. In a good way, it's a good thing, but it's also a bad thing, right? If you're an entrepreneur like myself, I am gonna become a target. And it's not like if you have $1 million, you're not super rich. That's like the new middle. That's the new upper middle class. Okay. If you make if you have your total wealth is under 10 mil, you're still not the elite, guys. Even 50 mil, you're not the elite. The elite are like in the billions. Okay, they're the ones who are really benefiting off of this. But yeah, I mean, currently a lot of upper middle class people, they have stocks, a lot of stocks, and they think they're rich. But I'm telling you, when you adjust it for inflation, even if it goes higher and higher, they're going to be losing money. And then eventually it will crash and then they lose everything. So those people worked hard and they created jobs. They're the small business owners. And a lot of the upper middle class is going to get wiped out now. So envy is the most disgusting thing in the world. Just means I don't want to get in. I'm going to get mad. Let's just say I've had my cars keyed by pieces of shit. Alright, negative savings rate for the bottom 90% of the population. Yeah, they have negative savings, guys. If you actually look at their credit card debt and then the money they have in their savings, doesn't balance out. That's the problem. They're just going to stop paying their credit cards. That's another reason why the financials are struggling to rebound with the rest of the stock market. And what I mean by the rest of the stock market is like 10 mega monopolies, the FANGs. Just, they're the tide raising all ships because they're in index funds, cookie cutter, just giant baskets of index funds. Like 40% of the index fund is in like Apple. And then the rest is smaller companies. So the index fund goes up and then money pours into the index fund and then some of the money trickles to the smaller stocks. That's why the entire market goes together. There is no price discovery. There is no free market. Do you understand? Thanks to Ray Dalio and central banks. The simple reason why 80% of Americans can't save money. Let's take a look. So income needed of a family of 4 to break even. It's above 50,000. Difference in 2017 incomes between top 20% and bottom 80%. So the bottom 80% is struggling. The bottom 80% is this red down here. And it's below the break-even line. So a lot of, most people, 80% of them, are actually financing their livelihoods with credit, with debt. And they don't really have savings. This is the upper middle class, this blue line. It's the top 20%. And then, of course, you have the top 5%. They're just doing great. I was talking about a bell curve in the private group. Look it up on Investopedia, bell curve. Look at this line. This looks like a perfect large cyclical cycle. And these cycles are all bell curves. They go up and then they come back down. Well, it looks like we peaked out. So this consumer debt as percentage of wages is the dotted line. So debt has been rising versus the percentage of your wages. So your debt has been outpacing your wages. So PCE as percentage of GDP. Personal consumption, rising personal debt levels led to increases in consumption in excess of GDP growth. What's this orange dotted line? PCE as percentage of GDP. Since 2000, rising personal debt levels only maintains consumption at a level which supports economic growth. Right. Okay, so this is what I've been trying to tell you guys. With all this monopoly confetti money being made into existence, the more cash they pump into the economy and the system, the more indebted corporations become and private individuals. And at some point, your debt is so large, you can't keep spending. And if everyone files, Chapter 11 or 7 or whatever, what does that do to the economy? Well, businesses go under. People lose everything. Things get repoed, like vehicles. That's what happened in 2008. But this time around, it's gonna be way worse. All right, here's something alarming. Truck drivers suffer largest job loss on record after April bloodbath leaves 83,000 unemployed. Listen, guys, the largest employer in the U.S., I believe, or the largest employment in the U.S. is truck driving. Now, these people are the lifeblood of the nation. They all goods are being transported by them. And the supply chain broke, and now they're losing their jobs. And that's a lot of, it's mainly males doing this. There's some women, but it's going to be a lot of pissed off men out there, let's just say. Thursday, we noted April orders for Class 8 heavy trucks fell a staggering 73% year over year and a 44% from March, the worst order numbers on record as the shutdowns have put the trucking industry on the cusp of freight cliff. I mean, it's just devastating. And this isn't gonna stop once the lockdowns they come off, because the small businesses and the mid-sized businesses that are going under right now, they're not going to be ordering things again like a few months from now. What I'm trying to tell you guys, we're not returning to normal. We're not returning to how things were. Not even freaking close. And this is the bloodline of the country. One of the most, if not the most crucial part is transportation and logistics. All right, here we go. Worst jobs report in history. 20.5 million jobs lost as unemployment rate hits record 14.7%. I was just looking at the time. While economic fundamentals ceased to matter about a month ago, when the Fed, by the way, this is all by Tyler Durden, you guys know. Fundamentals, I want to give him credit. This is where you get your news, guys. Fundamentals ceased to matter about a month ago when the Fed went nuclear and not only injected trillions in the bond and repo market, but also directly backstopped the corporate bond market, with many expecting it will do the same in equities. There is something utterly surreal and terrifying watching stocks surge as the U.S. reports its worst jobs report in history, which it did moments ago when the BLS reported that in April the U.S. lost record 20.5 million jobs. Not quite as bad as the 22 million expected, but as this level, what does it matter? The biggest drop in history and 10x more than the 2 million jobs lost at the peak of the Great Depression. Now listen, back then there was less people. I get it. So guess what? 2 million people losing their jobs back in during the Great Depression, you could probably equate it to, I don't know what the population was back then, but it was like, it wasn't as much as today, right? It was like 1/3 the size, maybe. So let's just go off of that. I don't know how close that is. It's probably close. So 100 million people during then, 2 million, that's 2%. It's not 14%. So that would be, yeah. The change in total non-farm payroll employment for February was revised down by 45,000 from... I don't want to go too much into detail of all this. You guys can read it on your own. It's bad, okay? So look at this chart. I like visuals. I'm not a numbers, like, I'm more of a visual person, right? Look at that. That's all you need to know. And they're not coming back anytime soon. It's way above the 2008-2009 financial crisis. At some point, this will stop and come back down. The question is, when will it stop? I have a feeling that the websites for all the states have been down. Okay? Because I talked to a friend, he's been trying for months and he can't because it's always down. So this is going to continue to rise probably throughout the entire summer. How scary is that? Very, very scary stuff. It says temporarily out of work. I think it might become permanent. These charts are just hockey sticks. Next article. The Nasdaq is now bigger than the rest of the world's stock market. after the unemployment, the Nasdaq is now bigger than the rest of the world's stock market. Gee, I wonder why. Maybe it's because we have these companies on the Nasdaq. Amazon, all-time record highs, guys. All-time record highs. It kind of makes sense because it's the only place you could buy things from, but come on. Unbelievable. You know, the younger generations, if freedom of speech prevails and education and online self-learning, self-educating prevails, and the younger generations find out what has happened here in the past few decades, the older generations, and even mine, right, the Gen X and the millennials, I mean, the universe will pay it back. But I feel bad for the younger generations. Like anyone right now, like under the age of like, I don't know, 20. Like they have no idea that the people, the older generations are just literally selling them out. Like it's just disgusting. That's very immoral. You know, that's why a lot of the sheep, the normies, they like keeping their heads in the sand. Because they, deep down, somewhere, they have to know that they're part of the problem as well. Society is part of the problem. Um, a good example of that would be Facebook, right? People go on social media and they try to impress all the people they hate with pictures showing them like they have the best lives ever. Most of them do that. That's why I got off of there like 4 years ago. It's a great mirror to society and where it's come. And that's just the cycles, guys. Remember, good times create weak people, and then the bad times create strong people, and strong people create the good times. Buybacks are back. Stocks soar even as equity outflows hit 2-month high. So equity outflows is the boomers selling off stocks so they have cash to live off of because they're very concerned. They're not that dumb. They know that, these unemployment numbers, it's pretty risky to hold stocks. And they're not that dumb, all right? So they're like, well, I'm just going to get out now on this giant bull trap. Or maybe it's the smart money getting out. Or the smarter money. I'm not saying smart money got out before all this, and they're in mining stocks already. I know because I have software and I can see which funds and even individuals who buy this stuff. All right. So with record high outflows, how's the market going higher? BlackRock, QE. A tragic record. For the first time ever, more than half of the US population is not working. Yeah. Alright, let me read this real quick. Today's jobs report was, as expected and as previously discussed, absolutely horrific, although as Bank of America points out that there was one silver lining, which is Larry Kudlow quickly latched onto, with 72% of the jobs lost being reflected as temporary layoffs. Workers should be able to be more seamlessly rehired as the economy reopens. No. The small businesses did not get those SBAs. A lot of them didn't. So I'm wondering, are they going to send them out again? And because corporations were taking them, of course, and the banks were forking it out to their buddies, right? And their biggest customers. However, the longer this pandemic... I said it. I'm done. It's over. You guys can find me on other platforms. You just have to search MMGinvest. Alright, goes on. The more likely that what was temporarily becomes permanent, and as we pointed out in the previous post, even baseline cases see unemployment not returning back to normal until 2022 or later. It's not coming back to normal. Probably not for a very long time, like decades. That's my fear. Offsetting this, good news. However, there was one especially scary aspect of today's jobs report that has not gotten enough publicity, namely that, as BOFA writes, the unemployment to population ratio plunged to a record low, with only 51% of the population working. And you know what? Half of that 51% are like part-time jobs, probably. Inversely, this means that in April, 49% of the U.S. population was not working. It's insane. I have more work than ever, guys. Don't worry about me. I've been driving around every day. Like nothing's really changed for me, literally. But I notice how things have changed on the outside world. There's a lot less traffic. On the weekend, surprisingly, there's a lot of traffic. It's like any other weekend. People are just still shopping. But, in the morning, it's like, it's nowhere near what it was. And you know what's weird? Like, I've been out and about this entire time. And you can kind of tell, like, from the people who have been like literally sitting in their homes this entire time versus the people who've been working and they're out and about. The people who've been working out and about, it's like nothing's really changed for them. They walk around, they laugh and talk, and they still have jobs, and they're absolutely not affected by this. Meanwhile, the other person who's maybe gone out twice in the past 2 months, who has no job now, is walking around like it's like um, some dystopian nightmare for them, and they're just concerned. You can kind of see it in their faces, and probably depressed, and who knows. There's probably people who watch me who feel like that, and I feel for you. This sucks, and honestly, people need to be more angry because none of this had to happen. This was done on purpose, I believe. You know, Sweden. Look at Sweden. They're fine. They did none of this, and they're fine. So, like, I'm angry, and I'm not even like affected by this. But the people who are, I mean, you guys should be really like your livelihood's gone, right? I don't know what else to say. I'm actually disappointed that people aren't angrier, but the sheep are sheep. A V-shaped recovery will not be possible. Today's job losses reflect a 40% GDP crash. 40% GDP crash. GDP is already negative. I mean, GDP can barely like get to 3%. Its labor market slack likely to remain substantially even in late 2021. Yeah, it's just it's bad. Let's take a look at, well, for one, the futures are green, of course. I'm gonna make a TA video. I don't want to make this video too long. We're coming up on an hour. I don't want to hit that 1 hour mark. Nobody's gonna watch this video. I'll do a TA video tomorrow. Alright, guys. Until next time, smash them likes, go to my website, join the private group, leave anything in the comment section. I will reply, and share my videos. It's the only way my channel is growing, legitimately, seriously. And I'll continue to do this if I continue to grow, but if I don't, you know, peace out. Everyone on their own. Until next time.